Hi, I'm Tim Sustak, Interim Chief Investment Officer with Mid-Atlantic Corporate, and this is the economic update for February 2015. Today, we'll take a look at some of the important economic releases of late that deal with the consumer, and we'll also take a look at the recent rate picture. The economy is continuing to offer mixed data, so let's take a look at some of the positives and negatives. To the positive, consumer confidence. The Conference Board's index soared in January, up 9.8 points to a reading of 102.9, the highest level thus far in the recovery. This really is only meaningful for the economy if that confidence turns into consumer spending. GDP. I'm putting this one on the positive side even though the advanced reading of fourth quarter GDP was actually a little disappointing. Growth moderated in the fourth quarter, coming in at 2.6%. Although analysts were looking for something above 3%, the bright spot here is that the personal consumption component of GDP was strong. This is important, particularly in light of the December retail sales report that we will mention in a bit. Gasoline prices. While not really an economic statistic, the trend downward in fuel prices has certainly given consumers a boost in the wallet. If gasoline prices stay low, it could be an extra shot in the arm for the consumer spending during 2015. To the negative. Retail sales. December retail sales were particularly weak, coming in down 0.9%. While some weakness was expected, sales declined 0.3% even when throwing out gasoline and autos. Remember what we said about the spending component of fourth quarter GDP though. Even though the consumer seems to have gone AWOL in December, we can take solace that overall they were still in the game for the fourth quarter. Personal spending. With the commentary on retail sales, it's no surprise that the personal spending number was not great. Spending for December came in down 0.3% versus estimates of a 0.2% decline. Though the fall in gasoline prices hurt here, spending was down even without the gas price effect. Hopefully these same gas prices along with continued labor market improvement can help foster healthy spending in 2015. After the break, a look at the rate picture.
There we go. Thank you. How much was that again? 91? 91. Do they use Zlotys or Coronas here? 91. What country are we in today? Thank you.
Traveling is supposed to be a fun experience. Make sure your members' adventures are unforgettable with My CU Services prepaid foreign currency card. Not only will your members thank you, but your credit union will also earn a flat 1% revenue. Share on all foreign currency sales and purchases. To find out more, contact us at sales@mycuservices.com.
Welcome back. When you take a look at the yield curve over the past month, you'll notice that rates have dropped off, and at some points on the curve more dramatically than others. With economic woes in Europe and Asia, the markets have been chasing U.S. assets, be it for safety or the yield relative to similar assets in other countries. This has served to push prices up and yields down. If you have any fixed-rate agency bonds in the portfolio that you would like to sell, whether it be for liquidity or to redeploy elsewhere, now might be a good time to investigate where the market is pricing them versus where you own them. Additionally, if you have callable bonds, it's possible those that look like they would not get called just a short time ago are now at a point where a call could be possible or even likely. While no one knows where yields and prices are ultimately going, it's a good time to be watching the action for possible opportunities if it makes sense for your portfolio. Let's take a look now at some of the more prominent economic releases for February. That's the economic update for February. We'll have more next month concerning the recent economic releases and what's happening in the economy. Until then, thanks for watching Finection.